LNG prices have fallen significantly in 2023 as spot LNG prices into Asia ended the year at a 4-month low, having fallen by over 50% year to date. Not to mention the comfortable gas storage levels in Europe that mitigates chances of a serious security of supply problem recurring in the second half of this winter. 2023 has also witnessed the US leapfrogging both Qatar and Australia to become the largest LNG exporter, while China has toppled Japan for that top spot as the world's biggest LNG importer last year. So what's driving gas markets in 2024? Joining me to discuss this is Michael Stoppard, Head of Global Gas Strategy at S&P Global Commodities Insights. Michael, thanks for taking the time and coming on the show. The Asian spot price marker, JKM, has seen a drop towards the end of last year. What pressured the price, and do you expect a subdued price environment for the next couple of months?
Yeah, I think the market is really feeling very comfortable. And I think you hit it in the introduction by mentioning those storage levels. I think it's the storage levels, particularly in Europe, which are felt also in the Asia Pacific region, that are giving this sense of comfort. And I also think that as we enter the second half of January, traders very much think they have a clear pathway now to the end of the Northern Hemisphere winter. Yes, we're currently having a very cold patch, and yes, weather can be very cold in February, but we have a clear pathway through to the end of the winter into March and April, and that means that the market is relatively soft.
How are the uncertainties, Michael, relating to the Panama and the Suez canals and the Red Sea affecting or could affect the LNG market in this winter period?
So we are seeing obviously concerns not only more recently over the Red Sea and therefore the Suez Canal traffic, but also constraints through Panama Canal. It's really quite striking, I think, that hasn't riled the market, at least in gas and LNG, as much perhaps as one might have expected. But you know what? I am a market fundamentalist. I like to look at market fundamentals, and I really don't think this is going to change the supply and therefore the supply-demand balance that much. What it does is it reroutes, and that puts extra costs on the producers, and it puts extra costs on the shipping part of the chain, and it complicates logistics. So it's certainly problematic, but I don't think it's really a threat to global supply. I think it could lead to a greater partition between the Eastern Hemisphere markets of the Asia Pacific and the Western Hemisphere markets of the Atlantic, and that will be interesting to watch and important to watch in the coming weeks.
The COP28 final communique has, quote, recognized that transitional fuels can play a role in facilitating energy transition while ensuring energy security, unquote. Don't they just mean natural gas here? So why not mention it clearly? And how big of a win is this for the gas industry, which has always insisted in the last few years that gas is a destination fuel and not just a transitional one?
Yeah, I think it's inevitable but regrettable that oil, coal, gas and other fuels all get bundled together under this term fossil fuel. We will need fossil fuels for the coming decades, and it makes sense to minimize the GHG, the global warming intensive fuels such as coal, and therefore to maximize the lowest footprint of the fossil fuels, natural gas. And that's why natural gas is often referred to as a transition fuel. So I think it's a great shame they're all bundled together. The big talk at COP28 was whether to talk about a phasing down of fossil fuels or a phasing out. And in the end, they went with this expression, a transition away. But we need to remember that the peak in coal consumption and the peak in oil consumption will come earlier. And I think the peak in gas consumption will come later.
How is the industry grappling with the challenge of reducing the carbon footprint of LNG, especially with regards to methane? As per some studies, LNG could in certain instances be even worse than coal due to methane leaks at the production infrastructure.
So let's take the issue of methane leaks. They're very serious. Methane is a potent greenhouse gas emission, and it needs to be addressed. But I think the really good issue here and the exciting issue is that this is a problem where we have a solution and we know what the solution is. Technology is moving really fast in this area, both in terms of measuring the emissions, detecting them in the first place, measuring them, and then mitigating them, which means stopping them. And we've seen at COP28, effectively the oil and gas industry commit to near zero methane emissions, and they know how they can achieve this. So I think we need to accept that this is a problem with a solution, and that the bigger challenge longer term will be dealing with the carbon intensity.
Which is the bigger factor driving demand for LNG? Europe shifting away from Russian piped gas, or China, Asia shifting away from coal to gas, you think?
It's a great question. I think it's probably a timing question. I think LNG has been responsible for replacing approximately half the lost Russian pipeline gas into Europe. So the war between Russia and Ukraine has led to a huge, unexpected additional demand for LNG in Europe. That has happened. That additional demand in Europe will remain. But as we look ahead, it's going to be Asia, Asia, Asia. And I think during this decade, it's really going to be China, China, China. These are the long-term structural growth markets.
Europe has at first hesitated at signing LNG contracts that would run for 20 plus years, but then some have conceded. Do you think Europe has definitely made up its mind as to what role gas and LNG will play in its future mix?
LNG in Europe is needed but not wanted. That's what I would say. There was some reluctance to sign long-term LNG commitments, but we have that was particularly, I think, in 2022 and possibly into the early part of 2023. Since then, we have seen Europe step forward and make 15 and even 20-year commitments to that LNG. And if you start importing LNG in the mid-2020s and you sign a 15, 20-year contract, that LNG is in the mix until the late 40s. But so long as it doesn't extend after 2050, which has become a quite iconic date or a quite symbolic date, I think if your contract for supply only goes up into the 2040s, then that is something that companies are prepared to do and which member states are prepared to accept in Europe. So LNG needed but not wanted, I think.
The EU continues to import Russian LNG. In 2022, these shipments jumped by 30% to around 20 BCM, and then remained flat in 2023 at the same level approximately. Will the EU be able to rid itself anytime soon of Russian LNG, you think?
Yeah, it's ironic, isn't it, that I mentioned that LNG had played a major role in substituting or replacing lost Russian pipeline gas. But some of that replacement was indeed Russian gas in the form of LNG rather than pipe. So that's remained a significant part of the mix. And as you've said, it grew in the last 2 years. Can Europe rid itself of that Russian LNG? There is a move within the European Commission to move in that direction, but ultimately this is a decision of member states, of each country, and I don't actually see a willingness or a determination to take that on in certain key European member states.
There seems to be a sense of calm with regards to the gas situation in Europe. Gas demand in the EU continued to drop in 2023, especially industrial demand. This has helped gas prices in Europe to remain subdued and supported the buildup in gas storage, which we've spoken about earlier. Has there been a structural shift, Michael, a structural shift down in EU demand, Or is there a risk that demand might potentially bounce back up and reveal the falsehood of that sense of calm?
I think you've put your finger absolutely on the issue there, Nasser. That is the question. It is all about demand. Demand was very weak, and I think many people have been surprised at how weak it has remained for a significant amount of time. My feeling is that we don't know where the equilibrium level of demand is. We don't know what is the equilibrium between price and demand. I think a weakness in price will lead to a demand response. So I think we could have some demand surprises, some demand pressure on demand later this year and into the following year. We should look out for that. Absolutely. I can't believe that the very substantial cuts in European industrial demand are all permanent. That can't be the case.
Russia's Gazprom set a new daily record just the other day for gas supplies to China through the Power of Siberia pipeline. It also said total gas exports to China via the pipeline amounted to around 22.7 billion cubic meters in 2023. That's nearly 1.5 times more than the 15.4 BCM shipped in 2022. Could that Russian gas dampen China's demand growth for LNG this decade?
Well, I think we need to remember that these volumes from Power of Siberia are the fruit of decisions made many, many years ago, back as far as 2014, and certainly well before the current stage of the Russian-Ukrainian crisis. So actually, I think as we look forward, all eyes are not on Power of Siberia, but on the new pipe, the new proposed pipe, Power of Siberia 2. Now, if that project were to go ahead, and there's a lot of speculation about the presidents of Russia and China doing a deal sometime soon to make that go ahead, that would target the Beijing-Tianjin area, and that would be a threat to current LNG outlooks. I think the volumes coming from the existing pipeline coming into the northern coast of China, the LNG industry has long ago accepted that that market was going to Russian pipeline gas.
Qatar is targeting to bring online 48 million tons per year of new supply by 2026. Given the pace of work on the expansion projects, do you think the timeline is attainable? Are the projects moving according to schedule?
I think we feel very confident that the Qataris will add this major 48 million ton expansion. They've of course already made a final investment decision some years ago on the first 4 of 6 trains, and we fully expect a final investment decision this year on the remaining 2 trains. You can see that in 2023, a lot of progress. There's been a lot of news with regard to getting in strategic partners, strategic investors, and in terms of signing long-term contracts. So I think the Qataris are moving forward.
Outside of the big 4 LNG producers, US, Qatar, Russia, Australia, many mid-tier LNG producing countries haven't been utilizing anywhere close to their full utilization capacity despite the tight market. Do you expect countries like Nigeria, Malaysia, Indonesia, maybe Algeria or Egypt to be able to make a turnaround quickly before the LNG market gets saturated later on this decade?
I think it's a mixed story there. I think that in some cases, some of the countries are temporarily down, and in other places there is a structural shortage of what we call feed gas to put into the LNG plants. I would single out Indonesia as one to watch for a springback. They made in 2020, in late 2023, mid 2023, the largest gas discovery made in Indonesia since 2000, and in fact the 3rd largest oil and gas discovery made in the whole world in 2023. And they will be able to link that new gas field relatively easily, I think, to some of this redundant LNG capacity that you've referred to. So my answer to that question would be, let's watch Indonesia. It'll be fascinating to see how that moves forward.
Interesting enough. Thank you very much, Michael Stoppard, Head of Global Gas Strategy at S&P Global Commodities Insights, for joining us on the show.
Pleasure to speak with you, Nasser. Thank you very much.
Thank you.